I recently watched one of your videos on your YouTube channel, and the title was Could Tesla Become the Greatest Stock of All Time? I have to say it was very insightful. For the audience who have not watched yet, please can you summarize the reasons why you believe Tesla can become the greatest companies or stocks in history?
Yeah, sure. Of course, none of this is guaranteed. It's my personal opinion right now. But usually when you have a great company, a generational company, they have a product that is a great product. Like, for example, you have Google Search, or you have Apple iPhone. Facebook had their Facebook app, or Amazon has their site, and also AWS. But sometimes a company will find another big market. For example, Apple with their phone is such a big market, they're able to go into services, or Google, they're able to find YouTube. Microsoft has found Azure, like their cloud computing. But it's rare that a company can find like more and more big markets, because you run out of big markets. There aren't that many multi-trillion-dollar markets left in the world, and you end up fighting against each other. And so you typically need to go to a new undeveloped market that isn't really here yet. But these big companies, they tend to have a hard time being nimble and fast. So usually the big new areas are dominated by startups who can move faster. In Tesla's case, it's kind of interesting, because even though they have cars right now and they have, perhaps full self-driving or autonomous driving, these markets are getting bigger and bigger for Tesla. And this shouldn't happen. Usually the next market is smaller and smaller, and then the company growth starts to taper off. But for Tesla, their electric vehicle, the vehicle market is multi-trillion dollars already. And then autonomous driving is even bigger. It's like bigger than the electric vehicle market or the car market. And then the energy market is like bigger than autonomous driving, if they can really. And then the AI robot market is even bigger than any potential market, I think. And so it's very rare that you have a company that finds not just one bigger market as their next market, but 2 or 3 bigger markets, right, in the future. And they have not just a very good chance, but they have a leadership position. Right? They're in the position to take a lot of that market. Now, nothing is guaranteed, meaning who knows if Tesla will take the leadership position, the dominant position with autonomous driving and energy and AI robots. But I think they're in the best position to do it. And if they execute well, I think, it's very likely that they can have many, many decades ahead. Of course, when you look out more than a few years, it gets all blurry. People have a really hard time like being accurate 10, 20, 30 years, 40 years down the road, because too many things can happen. But I like the setup, right? The foundation of a company that is involved with so many markets and new markets that, that maybe other companies don't want to get into because it's kind of too hard or it takes too long. And it's interesting, like Tesla has been around for, already 15 years or so. And so you think like it's, for example, energy markets, some of these markets are extremely hard to get into. And it's hard for a startup, just 1 or 2 years to make a big dent in some of these big markets. So I think Tesla's been working at it for a long time, and they have a lot of things that I think people don't understand, that they're very serious. They're very serious about the future of energy and transport. And this is one of the reasons why they decided to make their own batteries. Like no car company is trying to make their own batteries right now. Like Tesla's like the only one. And it makes almost no sense, because it adds so much more complexity and risk and focus and capital. There's like almost no good reason, except if you really think that you can make a significantly better battery, right, at better cost and more of these batteries, then maybe you do it. But that's a really, really rare case. And but it sets up the potential for Tesla to become the dominant energy leader, right? Because they're making their own batteries. And if they can make the best batteries, that's going to give them a huge advantage. So a lot of different things going on here.
All right. So, like you said, it has been already 15 years since Tesla appeared on the market, but we might still have some opportunities to invest in them. Yeah, so, for the new investors, right?
Yeah.
Right. Um, Thank you, Dave. So this time, I'd like to shift our topic to other companies, if you don't mind. The one of the stocks we had talked about a year ago was Lemonade. And as you know, the Lemonade stock price has gone down dramatically, together with many other so-called growth stocks. So please, can you tell us if there have been any changes with your opinions or your perspectives on this particular company?
Yeah. So toward the end of last year, I was getting somewhat concerned about the environment of the Fed and what would happen in 2022. So I kind of reduced some exposure and risk to what I felt were a little bit higher risk assets like crypto or high growth stocks that don't have a lot of revenue to justify certain multiples. So yeah, with Lemonade, I reduced my position by half. It's a very small position. It's under 1% of my portfolio. I reduced it by half, as well as my crypto holdings. I reduced a lot actually. At the end of the year, I just didn't want to go through this year with all the volatility, and I just felt that it's very risky. Lemonade, the company, I feel like I group it together with some of these other companies where they have potential still. Like I see potential, but they're not knocking it out of the park like a Tesla. Like actually this morning I was thinking, it's rare to find a company that has super great valuation, like low valuation, and it's like a fantastic company that's like just doing amazing things. Oftentimes what you have is you have a company that's doing okay, pretty good, and their valuation is kind of high, like you have to go many years out to get a decent multiple. I think what we're having right now is with the recent crash of high growth stocks, you have a lot of pretty good companies that had valuations that were really kind of high based off of long in the future. Now they've come down actually quite a bit.
That's right.
And now you have some pretty good companies with actually some pretty decent valuations, And yeah, I'm tempted with some companies like ARK Invest is investing into Teladoc, Zoom, Coinbase, some others. And there are actually quite a few pretty good companies I think are getting pretty good valuations right now. And I think if I didn't have to compare it with Tesla, I would be much more diversified and in many other companies right now. It's just that I think it's also a risk too, because I could be wrong and my enthusiasm could be misplaced and things can turn out very different. But for now, I just feel like Tesla just seems like in a different level. I feel like 10 years from now, I think we're just going to look back. Everyone's going to know Tesla. It's going to be everywhere. And I feel like their execution level is so high right now. And I think it can continue. And so that's why whenever I compare it to Tesla, it's like, I'm not too interested. If Tesla wasn't there, I'd be interested in so many other companies, actually. I think it's actually an interesting time with the market crash to look into other plays.
That's right. So even though there are some attractively looking opportunities out there, when you compare with the Tesla, you still feel like you want to stay with Tesla.
Yeah. And I think also it's my personal situation too, where I'm not really interested in like protecting my investments too much or preservation. I'm more into growth, and I'm okay. I actually have a safe basket of assets already. Like I have some real estate and I have my business and some other things where I'm okay without my other investments. And so because of that, I'm able to take more risks than most people because it doesn't really hurt me, my personal life or anything, if my investments don't go the right way. But if they do go the right way, I have a lot of just hopes or ambitions to make good use of that. I want to have a lot of ideas to give back and to spend that money wisely. So that's just my personal take. It would be a different situation if I was still kind of working toward retirement. I would have to manage, I think, risk a lot differently than I do right now.
I see. Okay. Yeah, that's correct. When you want to grow, you need to focus on a small number of the opportunities. When you want to protect your wealth, you need to diversify. So I see. Yeah. So I think it is time to wrap it up. But before I let you go, can I ask for your last words for the beginner investors, please? Because the U.S. market that went into the correction territory now, and we are not sure how deep the market will go down further from this point, because we are not still seeing the first the interest rate up yet. So it's a long time to go. As an investor who has been staying in the market for a long time, a long period, very successfully, I would say. Please, can you share your wisdom with your fellow investors, please?
Yeah, sure. First off, I think this is my personal opinion. I just don't think, I think almost everyone in the investing world really doesn't know what they're doing. And I think that's important to understand first off, because a lot of the books people read, the articles they read online, the news, these people giving interviews, a lot of people are guessing. They're just guessing, and in a way they're pretending to know a lot. But who really knows what's going to happen in 6 months? It's like very, very unclear. And a lot of, I think, investing, it either goes two ways. One is you get really involved in the short term, the news cycle, trying to find the next stock that's going to go up in the next couple months, and you're very swayed by sentiment, market sentiment. So you become almost like a momentum investor trader, trade this sector, sell and go into this sector before this happens. And you're always moving around your assets. I think that's actually fine. And if you can find a way to do that well, that's great. I think the other way though, is to probably find companies that over time, long-term, can do much better than the market. But I think it's extremely hard to do that just by kind of looking at what everyone else looks at. And I think probably the core skill that very few people talk about is this idea of like super forecasting. And the idea is you kind of need to almost see the future, not perfectly or clearly, but you need to see some of the future before other people do in a very convicted way, a clear way. And because you see the future in a certain way, and then you need to combine that with understanding companies more than other people do. So you understand their management, you understand their financials, you understand their product, right? Their business model. And you find that, this company or these companies will do better in this future because I see the future, kind of where it's going, and I see these companies, I understand them better, and you combine them, and I think you can have a decent chance, to outperform the market. But yeah, I think the key is having a unique angle, because if you're just reacting to everything you're watching and seeing on the news, like, oh my gosh, the Fed's going to raise rates. What do I do? Do I sell this? And you're driven by emotion and reactions. And I think over time, that's a very, very difficult game to play. Long-term investing is difficult too. Sometimes I feel like maybe just index, like if you're a little bit more riskier, maybe you can invest in the NASDAQ, if you're less riskier, maybe the S&P 500, and then maybe on the side, you can have some companies that you pick with a smaller percentage of your portfolio, right? To satisfy some curiosity. But yeah, I think it all depends also on age, how old you are, how much income you have, how much risk you want to take, and your ambitions. But overall, my overall suggestion is take responsibility of your own investing yourself and come up with some unique kind of investing skills that can combine some different parts of investing, whether it's financials, like company analysis, understanding the future and bring that together for your own investing approach.
Fantastic. Excellent advice, Dave. Thank you very much for sharing. Let us call it a day. So it was a great pleasure to
Sure.
have you with us on my channel. Thank you so much for joining us today.
Thank you, Charles. Yeah, and thank you for everyone on your channel watching.
Please stay healthy and happy. Bye for now.
Thank you. You too.
Thank you. See you.